Hi, my name's Tom Elliot and welcome to another financial markets update for Hodges Real Estate. Well, for investors, particularly real estate investors, there is bad and good news at the moment. So let's deal with the bad news first. Now, there is bad news coming, I believe, on interest rates, although it's not immediate, it's not even this year, but quite possibly next year. Now, firstly, New Zealand has put up its official interest rate from 2.5% to 2.75%. And as I've mentioned in the past, for reasons that are more statistical than any real, anything that actually makes sense, Australian interest rates often tend to follow New Zealand rates. Anyway, New Zealand has started increasing interest rates. They are worried about inflation in that country. As a result, it is a sign that quite possibly in the next 6 to 12 months, Australian variable rates could rise too. Secondly though, and more importantly on the subject of interest rates, the new head of the US Federal Reserve, a woman named Janet Yellen, has said that as US unemployment is decreasing, it's now around 6.5%, and as the US economy is really starting to grow again between 3.5% and 4% per annum, the era of ultra-low interest rates in America is now coming to an end. And she expects to start raising rates next year, that's 2015, and predicted an official cash rate of around 2.25% by 2016. Now remember, official US cash rates have been between 0 and 0.25% for several years now. So pushing them up to 2.25%, that is a very big jump. So I guess the writing is on the wall for ultra low interest rates. It doesn't mean the Reserve Bank here in Australia is going to suddenly start increasing rates next week or next month, or even in the next 6 months. But if you're planning 2, 3, 4 years ahead, I think it would be wise to assume that interest rates here could be a little bit higher than what they are now. Secondly, there's a lot of mixed economic signals at the moment. Now, in Germany, the Bundesbank there said that they expect German growth to start slowing. Now, that's a real worry because Germany is the economic powerhouse of Western Europe. And if its economy is slowing, that means quite probably the rest of Europe will slow too. Not that it could slow much more because the Western European economy remains moribund as it has for quite some time. Second bit of bad news, there's been various bits of economic data emerging out of China suggesting that the Chinese economy is slowing also a little bit. Now, people have great faith that the Chinese government, when the economy slows, can just pull some levers, press a button and make things okay again. And in the past, that's what the Chinese government has done. I mean, they were able to flood their economy with cheap money. They simply ordered Chinese banks to start lending to people. There has been a property boom of sorts in China, such that one of the reasons that there are so many Chinese buyers here in the Melbourne and Sydney markets is because property is so expensive in mainland China that they look at our market and say it's relatively cheap. However, the Chinese government, although it has worked miracles in the past, cannot continue to work miracles. I guess a more immediate potential problem is what is happening in the Crimea. Now, as we know, Vladimir Putin has decided that the Crimea should probably be part of Russia again, even though for over 50 years, in fact 60 years now, it has been part of the Ukraine. I think all the concerns about the Crimea are overdone. Frankly, Europe is not going to do anything about it. It can't do anything about it. The Americans have absolutely no desire to get into another war from which there's no obvious escape. So as a result, the Russians will be allowed to have the Crimea with very little sanction, and there'll be nothing that anybody else can do about it. What is the good news? Well, as I mentioned, Chinese buyers, before they are still extraordinarily active in the Australian market. People who are looking to buy in the areas of Box Hill and Balwyn will see a lot of Chinese buyers there. I mean, you look at the clearance rate again, it's just rock solid at the moment at around 75%, give or take a few points depending on which suburbs and which areas you are looking at. Now, 75% means the market is a bit better than balanced. Anything above 70%, 70 is what I regard as the balance point. 70 to 80 means a strong market. A strong market is what we have right now. And also locally, the economy, while people are expecting unemployment in Victoria to increase, and it probably will, the reality is it's going to increase in very specific areas like Geelong, like Broadmeadows, essentially the places where some of the big companies like Ford and Holden and so forth have decided that they're going to pull out of Australia. I guess things to look out for in the near term are the federal budget. Now, there is fear among some people that the federal government, because it's desperate for cash, might look to wind back negative gearing. I don't think that's going to happen. Having said that, I do know that everything is being looked at the moment. So that's an area of potential concern, but unlikely. Another thing or another aspect of the market that is very, very active right now is people buying property using their super funds. Again, I think the federal government is probably looking at this, but given that it only allowed people to use their super funds to gear up and buy property just a couple of years ago, I don't see them closing this particular, I won't call it a loophole, but this particular way of financing property anytime soon. So overall, I think right now, locally here in Australia, the good news well and truly outweighs the bad news. In fact, bad news overseas often means that people say, you know what, bricks and mortar is what I want to have, and bricks and mortar in my own backyard. And if people from overseas, like from the People's Republic of China, want to egg us on in that regard, well, I say good luck to them. So there it is. Overall, I still think the property market's going to stay pretty strong for the time being. Thank you very much for your company. My name's Tom Elliot. This has been another Financial Markets Update for Hodges Real Estate.